What's up, guys? Enhanced Market here. So today I'm going to go over the basics of Elliott Wave Theory. I get a lot of questions every single day. What is it? How to use it? So I'm just going to go over this simple 5-wave structure and maybe a correction pattern, and then in the future I can go into some more details. Maybe I could put together some slides. That way you guys can get a deeper understanding of what it is and how to use it. But today I'm just going to go over the 5-wave sequence and the correction pattern. So Elliott Wave Theory is just basically the psychology of the markets and how the market moves. The market moves in patterns, or in Elliott Wave Theory terms, it moves in waves. And it's a 5-wave sequence, so 3 waves up and 2 waves down. And I'm going to draw a quick little pattern. So 1 wave up, wave down, wave 3 impulse is always the largest wave, wave 4, and then wave 5. So that's what a Elliott Wave 5-wave sequence looks like. And I would go like this. This would be wave 1, 2, 3, 4, and 5. So I hope you get that idea. That's how the sequence works. And time frame wise, this works on any time frame. Ideally, you want to look at the larger picture. If you go into the 1 minute time frame, there's going to be data everywhere, super confusing. So I typically like to do the one day time frame, even the 2-hour time frame. Those are what I usually stick to when I do my Elliott Wave Theory analysis. So yeah, the 1 day and the 2 hours is really best personally. Elliott Wave Theory, it's really subjective. There's no validity. There is validity to it, but if you have 5 different Elliott Wave Theory traders in a room, every single person can have a different count, and it really changes as data comes on or as time goes on. So it's always readjusting and figuring things out. Now, I made this little cheat sheet right here. These are the rules to follow when doing Elliott Wave Theory. So if you want to take a screenshot of this, that way you have it and you can follow it. You could do that now. These are the ratios that you have to follow when doing Elliott Wave Theory. So this is where validity takes place. So for example, wave 2 retracement. This is the retracement. It's a corrective wave. Usually it is an ABC. So we would have A wave, B wave, and a C wave. I can color that in for you. So typically it would look like that, or it can even look like an A, B, C, D, E, which would be a nice falling wedge, which is what I usually love to play. That would look like an A, B, C, D, E while getting tight. And it would look like this, a falling wedge pattern, which is typically my favorite pattern to play. But getting back to the fib ratios, wave 2 is typically 50% to 88.6% of wave 1. In order to be a valid wave 2, it needs to be above the beginning of wave 1. So for example, if this came down below, this would not be a valid corrective wave 2. It needs to be above. So that would be a deep retrace wave 2, so that would be valid. Typically 50 or 61.8% is the golden spot that I like to find. So you take the fib retracements from the bottom to the top, and it typically bounces off one of the 0.5s, the 0.618, or the 786 personally. I like to do anything above that. So we'll just do the 786 for example, and we can delete that. Wave 3. Wave 3 is the largest wave. That has to be the largest wave in order to be considered a proper wave count. Minimum, it has to be 161.8% of wave 1. Typically that would be your first price target, and then so on. So you do that by taking a fib based extension, going from the beginning of wave 1 to the top, and then drag it back down to the bottom of wave 2. So my first target would be the 1.618 or the 161.8% line. So we can drag this line right here. This would be my wave 3 first price target. That is 161.8% of this wave 1. Now on to wave 4. Wave 4 is typically a smaller retrace. It's usually an ABC or an ABCDE, just like wave 2, but more shallow. It's typically 14.6, 23.6%, and so on. So to find that, you could take your fib retracements, and from the bottom of wave 2, you can go to the top of wave 3. I'm just dragging it across just so these lines become longer, just so you know. And typically it bounces off the 236 or the 382 is what I like to play off of. So for now, I'll just go like that. For a wave 4 to be invalidated, it would have to come below wave 1. If it came below wave 1, the top of wave 1, excuse me, that would be invalidated. So has to be above. Wave 5. Wave 5, as you can see, it's equal to 100% of wave 1 or 61.8% of waves 1 to 3. So I'll show you how to do both. So typically you can either, I just usually take this box and I'll draw it wave 1, and then I can just move it. And then this would be my first price target, that line right there. Or you could take the fib extension from the bottom of wave 1 to the top of wave 3, and then back down to 4. And my first price target or second price target would be this line right here. And this would be target 5. So I hope you guys, see what happened there. Now let's go to a prime example using data. So this is AMD. I charted it out a little bit just to make it easier on myself. So here, like I was saying before, A, B, C, D, E correction, every correction typically does an A, B, C, D, E. That's why it's one of my favorite patterns to trade. So here, A, B, C, D, E with the ascending triangle, beautiful, beautiful trade. And then we have a wave 1 with, let me measure it out for you guys so you can see everything that I usually do. So take the fib retracement from the bottom of wave E to the top of wave 1. And here we had a perfect bounce off the 618 fib line. This is the golden zone. This is, this would be a great entry right here. As well as it held this trend line. So you can confirm Elliott Wave Theory with other trading styles. So it held this line, and it also bounced off the 618, which is perfect. Now, wave 3. How would you measure wave 3? So, wave 3, just like before, you take the fib extension from the bottom of wave 1 to the top of wave 1, and then back down to that wave 2. And your first price target would be that 1.618 line. So in this case, it hit. And then your second price target would be the 2. And in this case, it just barely hit that. So this would be a great spot to take profit. And on a smaller time frame, you can chart it like this. So this would be wave 1. And then wave 3 would end right there with a wave 4 pullback. And then wave 5 up there. And there's waves inside of other waves. I guess I can go into a more in-depth video in another video. I'm just trying to keep this simple. So now we have wave 3, which ended right here. Let me zoom in for you guys. So we would take a fib retracement from the bottom of wave 2 to the top of wave 3. And as you could see, just like I stated before, wave 4 is a shallow retrace, meaning it doesn't go down as far, and it bounced right off the 236. Perfect bounce. So at that point, you would enter right there, and then let's find our target for wave 5. Wave 5, like I said, you can either size wave 1 using, a line or a box or anything you like, or you could do the fib extension from the bottom of wave 1 to the top of wave 3 and then back down. And the 618 would be your target. This right here, which as you could see, it hit. So that's the gist of Elliott Wave Theory. I hope you guys understand a little bit more of what it's about and how it works. Once again, I'll go back to this thing just so you can screenshot that. I'm going to try and make a little Elliott Wave guide for you. That way you guys can save it and use it as you trade. Make sure you guys subscribe. Make sure you drop a like. If you stuck to the end of the video, drop a comment saying enhanced market is the best. Or just ask a question. I'm just playing with you guys. Just drop a comment. Make sure you like the video and subscribe. And if you have any other suggestions or questions regarding anything that you want to see or learn, feel free to ask me. I would love to go over everything. See you guys next time.